Today, eToro announces the launch of staking for U.S. customers. The Blockchain Association warns against efforts to roll back the Clarity Act, that's our crypto market infrastructure bill. And Josh Levine, chairman of Bitcoin treasury company OranjgeBTC, breaks down how institutions are navigating Bitcoin. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are on the rise this Monday morning after last week's pullback. By noon Eastern, Bitcoin climbed 3.5% to just under $114,000, and Ether and Solana's Sol token both climbed by about the same. Now, taking a look at a crypto-related stock, eToro shares rising nearly 2% as of midday after the retail trading platform announced the launch of staking for U.S. customers. Now, staking allows crypto holders who hold ETH, Cardano's ADA token, and Solana's Sol token to passively earn monthly rewards through their investments. eToro says it plans to expand this staking program to include even more crypto assets in the future. Okay, let's talk about the top stories. The Swift payment system is working to add a blockchain-based settlement solution. The interbank messaging system announced today that it's teaming up with more than 30 financial institutions to create a ledger designed to handle cross-border payments around the clock. Blockchain software firm Consensus was picked to develop a conceptual prototype. Now, while Swift works to develop the infrastructure, the announcement caveats that supported tokens will be up to central and commercial banks. Swift is a messaging service used by financial institutions to transact with one another, often internationally. Next, the Blockchain Association is cautioning against efforts to roll back the first major piece of crypto legislation to become law in the U.S. So in this letter that was sent to congressional leaders today, the association reaffirmed its strong support of the digital assets industry for the Genius Act, the comprehensive framework for dollar-denominated stablecoins that was enacted back in July. So this letter addressed to a list of lawmakers, including Senate Banking Committee Chairman Tim Scott, Ranking Member Elizabeth Warren, House Financial Services Committee Chairman French Hill, and Ranking Member Maxine Waters, asserts that Genius is settled law. The letter also points out that the act establishes one-to-one reserves, federal supervision, and strict transparency, giving entrepreneurs the certainty to build in the U.S. It also provides economic benefits as well as consumer protections. Now, the letter comes after banks and crypto firms pressured lawmakers earlier this month over the issue of stablecoin rewards. Bank advocacy groups are warning that allowing rewards for stablecoins will lead to a rush of customers yanking funds from community banks. Today, the CEO of the Blockchain Association argued in a statement that stablecoins are not a threat to consumer or financial stability and are an upgrade to a system that has long underserved Americans. She added that any attempt to weaken Genius would undermine U.S. leadership and drive innovation overseas at the very moment that we are poised to lead. Finally, a group of security experts is asking lawmakers to re-examine parts of the Clarity Act over national security concerns. In this letter sent to Senate Majority Leader John Thune and Senate Minority Leader Chuck Schumer on Friday, the group, which includes Transparency International US and the Free Russia Foundation, argues that Congress must ensure crypto policies include provisions to protect against things like money laundering and sanctions evasion. The letter argues that digital assets risk becoming the new frontier for laundering the proceeds of corruption, including bribery and embezzlement. Now, the letter points to recent charges against a senior Venezuelan official and his associates who allegedly converted millions in bribes and embezzled state funds into crypto before moving them through U.S. exchanges. The group writes that it's encouraged by the market structure framework recently released by Senate Democrats, recognizing that any durable digital asset legislation must include strong anti-money laundering and sanctions safeguards. The group says its recommendations build directly on that vision, with the goal that innovation in the crypto space does not come at the expense of U.S. national security or financial integrity. All right, turning back to markets for our main story. I spoke with Josh Levine, chairman at OranjgeBTC, a Bitcoin treasury company that recently announced the purchase of around $400 million in Bitcoin. He discussed macro market trends and explained how Bitcoin will continue to be a strategic asset over time. So I want to start with markets because Bitcoin's looking to bounce back from last week's volatile trade. We're back up around $114,000 today. What's your reaction to last week's pullback and the recovery that we're seeing as we start a new week?
Well, first of all, Mackenzie, thanks so much for having me on the show. It's a privilege to be here. I've loved your show. I love the guests that you have on and just admire your work, and I just wanted to say so. I think the key thing is to look at things in a short-term perspective and in a long-term perspective. And the last couple of weeks have actually been quite interesting for Bitcoin. There's been no shortage of macroeconomic news that's come through the rates market. And that was also coupling up with a huge options expiry date, some deleveraging that we saw in the space as well. And in my eyes, it weathered all of that extremely well. We were doing this, conversation just a month ago. We'd be talking about all-time highs. It's really kind of treaded sideways since those days. And that causes me to kind of look things in the big term, or excuse me, in the long term. Long term, we've seen an excellent return year to date. We've seen a phenomenal return over the last year, and certainly the history of Bitcoin going back through 2011 augurs well. So we think the long-term trend is in place, and the short term, it weathered this test extraordinarily well.
So Orange Bitcoin is a Bitcoin treasury based in Latin America. You're actually the largest in the region thanks to a purchase of around $400 million in Bitcoin. So far, we've seen many of these crypto treasuries launch in the US and on US exchanges. But talk about what this crypto treasury strategy brings to the Latin American market and whether the benefits differ for investors in the region versus those in the US.
Sure, it's a great question. I'll point to a couple things if that's okay. First of all is the need for Bitcoin in the region. This is a part of the world that's experienced inflation, that's had more volatile capital markets overall. And so Bitcoin as a hedging asset to kind of help investors maintain its purchasing power, their savings growth over time, we think Bitcoin can be a phenomenal tool for Latin America, for Brazil in particular. The second thing is here in the US, we've seen a number of Bitcoin options come to investors. We've got mining companies, we've got treasury companies like you've described. We've got trading platforms. There's a number of ways to kind of invest in the ecosystem. And in Latin America, there really hasn't been, So we believe that we're bringing a great option for investors, be it institutional or retail, that want to participate in this ecosystem to invest in the ecosystem.
So adoption of Bitcoin and other crypto assets has been stronger in regions outside the US. Many people are comfortable holding the assets directly. So why might an investor buy into a digital asset treasury rather than the asset itself?
Well, I think you brought it up in the right framework. I mean, first of all, it's to have the basic exposure. We think Bitcoin can be accretive to a number of investor portfolios. So the first order when thinking about things as an investor is that basic exposure, be it owning the coin directly, owning it by an ETF or what have you. Now, we happen to believe that the treasury model is a better model. We believe that we can grow as a company. We can expand. To your previous question, we can also provide quite a bit of education so people can really understand the asset well and decide how to use it within their portfolios. So the first order operations in our mind is A, learn about the asset, B, get exposure however it feels right for you. And then beyond that, we think the treasury company is a great way to do so.
Now, do you expect consolidation among the so-called DATs? Because so many have come to market this year, is there room for all of them, or do you expect fewer to exist in the short to medium term?
That's a great question. I wish I had the crystal ball to really answer that question well. What it reminds me of is a little bit of all the innovation we saw in the 1990s when the internet was a new thing, a lot of what we're seeing in AI today. And what you've seen is, yes, the technology is real. Yes, it's got huge value for society. And then you see all sorts of business models kind of come up around it as the innovation kind of appears in the space. And then time will tell, right, as to which ones were really built to stand the test of time, which ones should merge together and become even stronger. So I can't give you a clean answer as to which ones will survive, which ones won't. I believe the business model is extraordinarily strong and we will see winners into the future. But for right now, I think the phase that we're in is kind of surfacing the innovation itself and providing a lot of kind of investor choice to back the investment model that makes sense to whichever investor is considering whichever DAT.
And we focus a lot on the US here on Crypto World, but what are some of the biggest advancements in the crypto space this year not happening stateside? What might have been lost in the focus on the US regulation and adoption?
Well, you just hit the big one. Actually, I think the biggest innovation is actually here in the US, and that's been the regulatory acceptance of crypto here and the work in the regulatory space to kind of bring crypto here. I saw the vice president speak at Bitcoin Las Vegas, and he made a powerful point that really stuck with me. And that is, this space is going to develop. It's going to develop all over the world, as you're bringing up. And the US should basically be positioned so that it can develop here as well. So, I think the big story has really been the US story and kind of bringing it in. And then secondarily, countries such as Brazil that are welcoming companies such as OranjgeBTC the development of other treasury companies in France, in the UK, clearly Metaplanet in Japan. Globalizing this, it's akin to me as if banks were a new thing and we were seeing capital markets kind of begin to assemble their national champions, if you will. So I think the combination of that regulatory acceptance here in the US and the expansion of these capital markets all across the world, that's the big story to me.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.